Hi guys. Well, the Fed did it again. They've raised the rates again, 75 basis points. No shocker here. We kind of knew that was coming for quite a while. And, I named this video Las Vegas Market, the good, the bad, and the ugly for a reason. The market affects people differently, no matter which one it is, whether it's the frenzy or a downturn. There's people that profit either way. So I figured we'd unpack this one a little bit and try to shed a little perspective on it. I'd like to start with just like giving out some basic Las Vegas stats, okay? Right now there are 9,446 homes on the market, and that is including like condos, townhomes, single family, all of them. There's 603 closings in the last 7 days, and there's an average of 18 days on market right now. And there's a particular stat that I wanted to emphasize. Sold listings are selling at a 98.9% of their list price. So what does that tell you a little bit? When you see a number like that, you see that prices are still not exactly like, there's not a lot of steals out there yet. Now, in another month, we'll see those numbers again and see where they're at. But I find that a little bit interesting, where everybody thinks, everybody's calling crash again. We have 15 weeks worth of supply also. So there's definitely inventory out there, which is great in one respect, it's great for buyers, that there's so much more out there to choose from than before. It was really hard before trying to get a deal done, going up against 14 offers if you're a buyer, and you have to waive appraisals and come in 10 to 20,000 over whatever the asking price was. It was tough for a lot of people, and that would be a little bit of a way of looking at the ugly of that. I know interest rates were low, but still people were coming out with a lot of cash, a lot of liquidity. So I think that's a way of looking at it. I'd like to get back into the Fed for a minute. Chairman Powell said something very interesting to me during that whole announcement. He said, "We are now at levels broadly in line with our estimates of neutral rate hikes." This is just an opinion. Everybody's got one, but I'm a firm believer that the Fed needs to shrink the money supply. They need to reduce the balance sheet. And I think now is the time for quantitative tightening. I know it seems like it could be difficult and hard on the economy, but I think it's the only way to put some air out of this bubble, this debt bubble that we're experiencing right now. So when they print money into thin air, with adding the magical zeros and buying debt and buying bonds, it's incredibly inflationary, of course. But more so, they're debasing the dollar. And that's why you see assets like real estate, gold, crypto going up. And I think they're going to play this trick again, and I think we're going to see it again for sure. What's massively inflationary is creating money out of thin air and then buying back all the debt with it. And a lot of that debt buying that we've seen, like we saw it in the 10-year yield, it was, at 3.06 or something like that a couple weeks ago, and then it dropped all the way down to 2.91, somewhere around there. And that's a big drop for the 10-year yield. So that shows me that there's a lot of quantitative easing. Am I allowed to say that, or is that the definition we're allowed to use these days? Speaking of definitions, apparently, so Financial Times says we're in a recession. The definition of a recession has always been 2 quarters of negative GDP, and we have officially hit 2 quarters of negative GDP, unless you're magical and can, change definitions. I told you this was the good, the bad, and the ugly, so, bear with me. And I can see why people are calling crash. Building permits are down, the real estate prices are starting to dip down the slide. Supply is coming in, a lot of supply is coming in. Loan demands are struggling. Builders are having contracts fall out. So I get it, but there's a difference between 2008 that nobody's talked about. Nobody says this and nobody mentions this. In 2008, the banks were locked down. You couldn't get money. People wanted to get loans, and they couldn't get loans. Now the banks have money. All the banks have money and nobody wants them. A time in history that interested me the most, and it's kind of how I'm hoping things go. This is maybe the good way of looking at it. In the 1940s, we came off a war. There was a supply chain issue. The economy had completely collapsed. It was a very scary time. This was around the times of the Bretton Woods Agreement, and the interest rates ended up coming down. The economy ended up stabilizing. Inflation was at about around 3%. So that's all I've got for you this time. I'll jump back on next time when we get a little bit of news. I'm sure it'll be soon. Please remember to like and subscribe. I love you guys.